Explore exactly what it takes to become a successful day trader and the power of consistency from the minds of the trading's elite. This is the Beyond the PDT podcast. Here are your hosts, Bryce, Tuohey, and Matthew Monaco.
How's it going, everyone? My name is Matthew Monaco, and I'm one of the hosts of the Beyond the PDT podcast. In this week's episode, we interviewed Jack Kellogg, also known as Jackaroo Trades on both Twitter and Profitly. Jack has a unique journey, not going to college, but instead saving up money through a ballet job, and then finding a mentor in Michigan where he ultimately moved and switched from trading these low-float momentum NASDAQ stocks to strictly trading OTC stocks. In the last 6 months, he's crossed $100,000 in profits, with $46,000 in profits in February 2019 alone. He has an incredible journey, so let's dive right into the episode. Word. So, yeah, why don't you just tell us a little about yourself? You know, how'd you start trading? How old are you? What are you up to now?
Okay, so I got into trading when I was 18, and I had been working a valet job since I was like 16, 17, so I'd saved up some money. I probably had just under like 10,000, and I wanted to get invested. So I gave one of my friends $1,500, and he was like doing futures trading, and I didn't really know what I was doing. I thought he could make some money for me. And then I quickly learned he lost it all. And I was like, all right, I'm going to learn how to do this myself instead of just giving other people money. So I was going to open up a Robinhood account because I had no clue what I was doing. And this was the start of 2017, because that was my New Year's resolution, was to start getting involved in trading. So I was in the process of opening up a Robinhood account, and then I saw one of my old friends at the gym from like my childhood, and he said that he wanted to drop out of college and he was studying Tim Sykes, and he was doing trading too. So I was very interested into what he had to say. Basically, from there, I went home, looked up a Tim Sykes video, and I was just in awe of how volatile these stocks were and how much opportunity there was. He told me to open a Thinkorswim brokerage account, so I threw like $7,500 into that, and my account like didn't really do anything because I was scared to lose money. I would lose $100. I would quit for the whole month, like March, May. I'd trade once and I'd lose, and I'd just be like, all right, I don't know what I'm doing. I'm not gonna trade my account to zero. So I would just study, and I got into Tim Sykes challenge because I convinced my parents to split half of it with me, because I knew college wasn't an option because I got like C's and D's in high school, and I never really excelled at school, but I excelled at sports and video games. So I kind of thought that trading was like a good mixture between sports and video games. And then I started trading a little bit. I opened an E-Trade account because I wanted to short a little bit too, and Thinkorswim had no shares ever. And that was just a $3,000 E-Trade account, but it didn't go anywhere for all 2017. I think I was down like $1,000 on the year. But while I was learning trading, I was still doing the valet job, and I was saving up a lot of money because I wanted to get over the PDT, and I wanted to open up a Centerpoint account because they had all the good borrows. So I just worked all of 2017 and studied, and really was just like putting in 10 hours a day to try to figure this stuff out. And then 2018 started, and for 6 months, I slowly grew my account, just trading basically the Tim Grittani strategy, where I would short overextended gap downs, I would short OTC first red days, I would short into resistance. I was slowly growing my account, but not as exponentially as I would like, because the fees were just killing me, and they were taking like 20-30% of my profits, 40% of my profits that I made. And then in May, that Turtle Beach that came around, and I just absolutely got smoked on it and lost $8,000, which was everything that I had made. Once you include fees and everything, then I was slightly down on my account, like $2, $3, $4,000. I had to take a step back because I was just mentally screwed up in the head. And then I took like 3 months off, and I had to save up more money again. And then I had like 29 grand, and now I'm a year and a half into the journey, halfway through 2018. And then I was talking to this one kid, Michael G. Scott, on Profitly, and he was trading OTC longs. And I was interested in his strategy because I thought his equity curve looked very consistent, and that's kind of what I wanted to go after. rather than these short sellers where, yeah, they win a lot, but when they lose, they get smoked. And I'm not really into getting smoked like that. So I kind of bugged him about his strategy. And I went over to Michigan where he lived at the end of August, and I opened up a $29,000 E-Trade account. And this was like kind of my last shot if I was going to be able to do this or not. And then I went there, and it was kind of crazy because that's when the weed stock started to heat up the last 2 weeks of August in the OTC land. In CVSI, that's when it was going on that run from 2 to 9. And that crash day, I was actually there with him, and we got to watch that and completely fail at trading it. But we did get to see the crash. And that week, those 2 weeks while I was down there in Michigan, I didn't make any money, but I watched him make $7,000 or $8,000 or something in the 2 weeks. So I kind of saw what it's really like, what his strategy was really like. And he's got the trader mindset. So he doesn't ever hesitate to cut losses quickly or anything like that. And I kind of learned a strategy. And then September was the next month, and I just knocked it out of the park. I made $2,500 very consistently for all 4 weeks in September, and I had a $10,000 month. And I kind of proved to myself that I could do this. And then October, I made another 11 or 12,000. And then November and December got kind of slow, but I still trended up while the OTCs were slow, making $5,000, $6,000, $7,000 a month. And then I decided to move out to Michigan and kind of like get this office with him so we could really take things to the next level, because we thought two brains would be better than one. And I moved out here, and we just have this little tiny office, moved the monitors in here. It was kind of slow at the beginning, but we got that Fannie Mae trade under our belts at the beginning of the year, and that kind of jump-started us. And then we both just smacked it out of the park in February. I think he made like $77,000, and I made 46. That was a really good month. Then March came along, which was this month, and just hit some singles, and here I am.
That's impressive. Yeah. Extremely impressive.
Yeah, so this guy, it sounds like he was just a great mentor for you and kind of helped you turn some things around and mainly focus on these OTC longs. What about these OTCs are you playing? How do you play them?
I mean, I'm kind of playing the whole, I like to think of it as I play the whole entire OTC market. I don't like to miss a runner. I don't like to miss stocks that run. I kind of just keep an eye on the whole thing. And I've seen enough OTCs where I know which ones have the right criteria to run. And I basically will try every single OTC that's popping up and has volume on the day and it's up a decent percent. And I'll just start buying. And if the stock starts working, then I'll just keep adding to my position and using the level 2 and the key levels on the charts to just keep averaging in. And then once the breakouts get going, you can make a lot of money, like $1,000, $2,000, $3,000, $4,000. And then if the breakouts fail, you can just cut for $100, $200, $300, $400 loss. And the good thing is before they break out, you can kind of just build yourself a cushion. So starting in early is kind of crucial to get some size there before, so you have a cushion of profits before they break out. And then once they break out, that's when everyone else is buying too. So you can buy there and then find the key level on the chart, and that kind of will be break-even risk if it fails.
Would you mind walking through the criteria you're looking in these OTCs and which ones work better than others?
A lot of it, I really think, comes down to the daily chart and the 15-day, 15-minute, just kind of get an idea of the trend of the stock, rather than a lot of people just get caught up in the intraday. And I kind of like to look at the bigger picture and more of the story of the stock and try to find what it's done in the past when it's gotten volume and it's broken out, to kind of give me a guide to what it's going to do when it breaks out this time and kind of what to expect. Does the stock fake red every day and go red a little bit and hold? And is it choppy? Does the stock gap up and go for 3 green days? You know what I mean? Just using the history that it's shown me of what to expect.
Gotcha. Yeah, that makes a lot of sense.
Now, so can we go back to a point that you made a little while ago? So you said you'd started trading, started hearing about trading towards the end of high school, and you knew college wasn't an option at the time. First of all, actually, how old are you now?
I'm 20 right now. I'm about to be 21 next month.
Okay, awesome. Good for you. And happy early birthday. So at the time, were you trading primarily low float stocks when you had first started trading?
Yeah, when I first started trading, I was just, chasing these stocks that were spiking in the morning, trying to catch these where everyone starts, trying to buy these low flow stocks that are spiking. That's what everyone tries to do, try to, a momentum trade. And that just didn't work for me because I found I was always buying the tops and selling the bottoms.
I know that feeling.
Yeah, definitely been there. And then you went to these OTCs, and it sounds like you're swing trading a lot of these instead of the quicker momentum scalps. Is that true?
I mean, I do both. It's kind of which ones do I feel like can trend for a few days and I can stay patient, or if the stocks are just, I don't know, it has a lot to do with the personality, I think. Sometimes I'll just scalp, sometimes I'll swing it for 4 or 5 days,
Gotcha. And yeah, so when you're swinging those, when are you looking to get out of them? When they get weak, or are you moving up your risk level as they go?
Yeah, I like moving on my risk level as they go, and then I like selling into a speed up. If there's like a big speed up where the stock just starts going nuts, then I have to start selling. I've never been able to take a stack more than 50%. So that's kind of my, like, if a stock's under 10 cents and I make 50% on the breakout, I kind of take that. If the stock's $1, $2, $3, $4, I try to look for that 15, 20, 30%. And then if the stock is very high priced, then I just look to make 10%.
So do you have a different kind of risk reward then for every trade you're making?
Yeah, definitely. I mean, it has a lot to do with what I expect out of these stocks, and that just has to do with seeing enough of them play out, I think.
Gotcha. So if a new guy was trying to break into the OTC market, what are some tips that you would have for them, or some things you tell them to avoid so that way they just don't get smoked right off the bat? Because the OTC market has kind of a bad reputation because of all the OTC pumps that used to happen back in the day. And I know a lot of people are just kind of nervous about dipping their toe into that market.
I mean, you have to be focusing on the right time of day with OTCs. So there's a lot of volume in the morning, and there's a lot of volume near the close, and the midday is always really choppy and illiquid. So for new guys, what they should focus on is good intraday and daily charts, buying near the close in the last hour or two, and then selling the first hour or even the gap up on the OTC stocks, and not really staying long and strong too long. Just focusing on buying the stocks near the close when it starts breaking out a consolidation with volume, and swinging it and selling into a morning spike or gap up.
Okay. Yeah, good advice. Do you think this could be done with, you started below the PDT, but you were trading some different strategies? Would this be a great strategy for some smaller accounts to get started?
I truly believe like OTC swings, picking them up late day and selling into the gap up is probably the best way to grow yourself out of PDT. I mean, my roommate, he started with $10,000 and he was under PDT, so he had to grow it 15,000, and he made like 20 grand January 2017 just by buying the weed stocks into the close that were breaking out of consolidation and taking his 500 to 1,000 into every single gap up and morning spike, and then just moving on and not trading during the midday, not dipping his toes in listed stocks, buying strong OTC stocks into the close and selling it in the morning spike the next day.
Damn. Yeah, that's some good discipline there. The OTCs, though, how do you deal with, they're very, seasonal. Sometimes they're really hot, like you were saying, January 2017, February of this year. And then there's weeks like this week where you were saying it's pretty much dead out there. How does that affect your mindset?
I mean, what's good about OTCs is you don't really have to go through a lot of huge drawdowns, maybe where listed stocks are more consistent, but you're going to be taking way bigger losses. So I'd rather have my equity curve just be going up, and then if there's nothing, I just want to be going sideways, rather than trading a listed strategy where it's very consistent and there's opportunity nearly every day, but you're going to be taking a lot more losses. And with OTCs, it's exactly what Tim Sykes says. If you just cut your losses quickly on these OTC plays, there's no reason to lose a lot of money on them. And then if they do work, you can make a lot of money, So I just need to stay patient for my OTCs, and I am trying to learn some listed setups right now, but I don't know. Have to see how it goes.
What listed setups are you kind of dipping your toe into?
I mean, I'm trying to get back into the overextended gap downs a little bit, because that was the only strategy that, because I track all my strategies by what I classify them as, and when I was shorting, that was my only profitable strategy. So I'm dipping my toes into that a little bit. And if people are more interested in that, they should just watch Trading Tickers. I don't really want to get into it. I am trying to learn What? Didn't you guys interview Harry Haas?
Yes, he was our last episode.
Yep.
Yeah, I'm trying to learn a little bit from him because I like his strategy where it's kind of low risk, where you kind of buy the bounce and you're in and out fairly quick, and you basically just risk your entry, and if it starts failing, just cut it. Yeah, that's the kind of strategy I'm looking for. It's just really low risk stuff. I don't want to risk a lot of money trading. It just messes too much with your mental capital.
For sure. You were mentioning that you are tracking your strategies. How important is that? Do you track data, or are you just tracking the consistency of your own trades? And how important is that to you?
I think that's really the difference maker in a lot of traders. You have to go out there and just start trading and keeping statistics on every single pattern. So average percent gain, average percent loss, win percent, just basic data behind the strategy. And then you can kind of see what strategies you do good on and what strategies you're doing bad on. And then you can kind of weed out, like once you get 10, 15, 20 trades per strategy, then you can kind of figure out what you're good and bad at,
So, yeah, absolutely. Are you tracking just the trades you take, though, or are you tracking, like, if you see a strategy that came up throughout the day that you might not have played, are you still tracking that to see how it worked?
I mean, I kind of tracked that last year. I was doing a lot of tracking of strategies, but tracking strategies, I feel, only get you so far because you need to be tracking how you perform with the strategies. You know what I mean?
Absolutely.
Like someone could be great with something, but if you just can't get yourself to buy a dip or something and you're better at buying strength, then some strategies won't work for you,
You were mentioning that being disciplined is pretty important too. Do you have any tips for people who are maybe struggling with discipline or, who are new to the game?
I mean, I kind of struggled with discipline when I first started because I would kind of hesitate to cut. Oh, I don't want to lose this money. But really, when it comes down to it, like if you don't cut, you're just going to lose more money. When you get that feeling when you know you should cut, don't even think. Don't even try to talk yourself out of it. Just click the button. Nowadays, whenever my risk level gets broken, I just get super scared and it's just get out at all costs. I'm slamming my keyboard, moving my average down to whatever the bid is, trying to go way under the bid to get out. I think that's just crucial. It's just not hesitating to cut because you can lose so much more money if you just don't hesitate to cut once. And then sometimes you're like, oh, I'll add to this loser. And then that's a huge snowball effect. And then you just lose all your profits. And it's just like shit.
Well, yeah, and exactly, and like we were saying earlier too, that's something that we see pretty commonly with short sellers. They might win a lot, but when they do lose, maybe it's because they're not cutting their losses, or maybe it's just because they're getting squeezed to hell out of their position. But
it's because, like, I think every stock's going to zero. So you can convince yourself that, oh, it'd be dumb to cover up here and take $1,000 loss. Like, this is a better spot to short or something, and then they just develop these huge positions and they get smoked.
Yeah, and I mean, I've been following your story for a little while now, and something that was definitely noticeable was when you switched over to these OTCs, the trades that you've been taking, your losses are substantially smaller than even your smallest gain. So how do you do that? Like, how do you size into these stocks so when you take a loss, it's so much smaller than the gains that you're getting on these?
Because I like to be super early on my trades. So before the stock even breaks out, if it's like 20, 30% from the breakout, or if it's a first green day just going green for the first time, I like to get involved with a very small position. And therefore, if the stock fails right off the rip, I can just sell for $100, $200, $300 loss. And then if the stock starts working, now I have 100, 200 of unrealized profits that I can now add to my risk when I'm taking the real trade. So I can get into a bigger position than if I just started when everyone else is buying, Once the trade starts working, then I can really develop a plan and size in and find that key level on the chart. And my average is going to be so much lower than everybody else's because I started buying wicked early.
So would you say that part of your plan is kind of developed as the trade starts to work? Like you don't have necessarily a full-on plan that you've got before you enter, but it starts to develop a little bit?
Yeah, it's not like, oh, I'm buying here and it's just I just kind of react to the chart and I kind of get a feel for the level 2 because on OTCs you can feel out the level 2 and the trade a lot more than listed stocks because it's not just up and down. You can kind of see when the strength comes in and see when the weakness is coming in. I'm just constantly doing quick math in my head to figure out what kind of size I can take. And then I like taking a lot of confirmation shares where if I don't think the stock's going to go below the price where I'm buying here again, like if it's late day into strength, the last hour I can really buy a lot because it's low odds that it's going to come back down and break support. And if it does, then I'll just cut. But if you get that nice strong close, if the stock spikes 5-10% of the close, now you can even move your risk up to red to green the next day. So, you can lock in double what you initially were risking. And then if it's going to have a morning spike, you can make 4, 5, 6 times on your money of what you're risking.
Absolutely. That's extremely important to know when to take those trades. Now, for these OTC trades that you take that you're looking for these gap ups, what have you noticed is the kind of the cause for the gap up? Is it mainly news, or is it because of a breakout that people are starting to buy it?
I don't know. I just feel that OTCs that finish strong on the day just have a wicked high odds percent of a small gap up, and then it just depends if buyers come in. Like, you rarely see OTCs gap down when they have a decent day and they're up 10, 15, 20, 30, 40, 50% on the day. I don't know what it is about it, but you really just don't see them gap down.
When you're watching these into the close and just trading them in general, do you put like more weight on the chart and the trend or the level 2? Because I know level 2 is more important on OTCs than NASDAQ because it's easier to follow.
I mean, everything really comes down to the level 2. If I can get like a lot of size or not, if the stock is kind of a sketchy level 2 where the bid just drops off real quick, that means I know I can't get a ton of size on it because I don't want to take huge slippage on it.
Just going on this OTC thing, because I'm fascinated by it, how are these different than OTC pump and dumps of the past? Because when a lot of people hear OTC, they think of pump and dumps, they think of the Wolf on Wall Street. Those days are kind of over, and a lot of people don't even think about the OTC market anymore. So just how are these different from those trades?
I feel like there's a ton of marijuana stocks. So I feel like the OTC is kind of mixed with the marijuana sector. So it's there's still some pump and dumps, but there's so many weed stocks now that it's almost just like a mixture of the marijuana market and the OTC market kind of combines. Kind of two sectors where I'm either trading weed stocks or I'm trading just low priced OTCs under 10 cents that are making breakouts,
So, if you were a new trader, you had to go back and do it all over again and start with, say, like $2,000, putting you below the PDT. What would you recommend that you would do? And, would that advice change for someone who has a little more experience, but maybe just not in the OTC market?
I mean, if I had to restart with $2,000 right now, I would just be really patient for the OTCs to set up and buy them late day and try to sell in the morning spikes. And I would just keep rinsing and repeating that. And it's awesome because you can just swing these OTCs rather than day trading these listed stocks where it's just real choppy and it's a headache and it's hard to make a lot of money. But with the OTCs, you can if you catch the right one, you can make 30, 40, 50% on your money. And that could be huge for a small account.
If you were to give advice to a new trader, though, would you tell them to start there, or would you say that starting off learning OTCs is a better way to go? Or do you think kind of that knowledge that you learned earlier helped for your OTC trading?
You should definitely just focus on learning OTCs. It's so much easier than listed stocks. Like once you get a ton of profits and you're over PDT, maybe you can start branching out and see if you're good at listed stocks. But OTCs are definitely the easiest in the whole entire market, and everybody just hates on them. That's where people should be focusing, I think.
At what point in your trading career did you kind of realize that this is not necessarily what you wanted to do full time, but that you could do full time? I know you mentioned that you had your first $10,000 month. Any point before that were you doubting yourself?
I mean, when I lost that $8,000 on Turtle Beach, I was kind of doubting myself, but I always knew that, I just wanted it so bad that I just wasn't willing to give up. I would just revolve my life around trading for the past 2, and even now, whatever I do in life, I'm just the first thing that comes to my head is what will this do to my trading? You know what I mean? That's what I'm constantly asking myself. Everything that I do in life is, how will this relate to my trading?
Absolutely. And I know earlier you were mentioning that you playing sports you think actually had an impact on your trading. Can you kind of explain, was that mainly psychological and just how you think stuff like that had an impact?
I just love competition, and I love games that are hard because so many people just give up on them, and I'm obsessed to figure out how I can just keep improving, and I just have this drive in me that just doesn't give up.
Exactly. I mean, that's a very common thing though for a lot of traders. Is a lot of the ones that just aren't successful just give up too early and they don't put in the time that's needed to finally become successful.
I truly believe that it will take a year to a year and a half if you dedicate your whole entire life to it. But if you don't dedicate your whole entire life to it, and maybe you're in college or you're still in school, it probably will take like 2.5 to 3 years rather than a year to a year and a half. Well, I think literally anyone can do this. You just need to show up every single day, make your eyes bleed to watching the tape, and just keep evaluating what you're doing. And just when you do make a mistake, really just like let it soak in and just think about it and figure out what you did wrong.
And now you said that, if you dedicate your whole entire life to trading, that you think it'll take about a year. You said back when you first started, you were kind of putting in, 10 hours a day to trading. Do you still put in that much time to this day, studying and learning and tracking your data?
I mean, yeah, because I'm stuck in a Michigan apartment with no car or anything, and I have tons of screens in the office, so I kind of just sit in here all day and just track data and review trades and talk to my friends. And I just think that I chat with a lot of people throughout the day, and it's always keeping me involved in the markets, where it's kind of hard for me to get away and like go do something that like I enjoy other than trading in life right now.
Yeah, that's great. So you are full-time trading right now.
Oh yeah, I started full-time trading when I moved to Michigan. I quit my valet job, but that was a great job because I didn't really have permanent hours. It was kind of, my boss would tell me, oh, we're doing this event at this wedding and we're valeting cars, or you're working a restaurant tonight, and you could kind of like schedule your hours. When it would be slow and I wasn't working, I would just throw earbuds in and I listened to every single chat with traders while I was working. So I was always thinking about trading, and that, I feel like that was huge. Having a good job where I could make a lot of money and learn at the same time.
For sure. Well, and it sounds like your story is a lot different than a lot of younger people today. You started really young and you decided that this is something you'd rather do over college. Do you think having that extra time to put in, do you think if you were in school, this would have been a harder journey for you?
Oh, 10 times harder. Like the only thing I had to worry about was just my trading. I just dedicated my entire life to it. Rather, where people have they have families, they want to go out and party with their friends all the time, or they're playing sports or something like that. Like I had nothing going on. I was just working and trading, working and trading, working and trading.
Yeah, that's awesome. And I mean, speaking from a college student standpoint, like it is difficult, and like you just can't put in sometimes the time that you want to put in. Some days you can't even trade because it's exam week or you just have a huge project going on.
So many other things on your mind. Like the only thing that's been on my mind for the last 2 years is trading.
That's awesome. And I mean, I have to imagine that's a huge part of your success today.
Yeah, definitely.
Out of curiosity, now, we talked about the fact that you think it is possible to grow out of the PDT, trading OTCs. What are your thoughts on the PDT? Do you think it's a burden on traders, or?
Yeah, I think the PDT is really dumb, honestly. Like, I don't know why they would limit us to 3 trades. It just makes it so much harder for people to grow their account because it teaches people bad habits. It teaches people, I have 3 day trades, I have to make the best of them, and then it's hard for people to cut losses. Rather, when you're out of PDT, like I have an E-Trade account, and you know how many trades I make a day where I just buy, like what I'm saying, I just buy a little, and then if I'm too early, I just cut right away. But then if it looks good again and I got shaken out, then I'll just buy right back, and I never hesitate when I'm trading because I know I can just get right back in. Rather than people with PDT, that's why I told people with PDT at the beginning, you asked what would be the major thing, is focusing on the right time of day, buying these OTCs in the last hour or two. The best time for you to not get shaken out.
Yeah, I think it's crazy to tell people that you've only got 3 trades, and I think it makes it a lot harder to learn from your losses because you can only have up to 3 losses per week.
For a month, you're going to only trade 12 stocks, you know what I mean, if you day trade. To gather data, that's going to take just a year to gather like over 100 trades, and that's just not good.
Couldn't agree with you more on that.
Yeah, definitely slows the whole learning process there. But interestingly enough, a lot of what your strategy is, it's kind of more PDT friendly than a lot of the strategies out there.
Yeah, that's what's cool about it is you can grow your account on a PDT with OTCs, whereas listed stocks, it's so much harder. You kind of got to get lucky and buy the right low float. You know what I mean?
And like you said, a lot riskier too. A lot easier to lose a lot more money.
What happens if you bought DCAR and you bought the breakout and you wake up and the stock's down 30, 40, 50% on offering news? You're screwed.
Yep, and that's been extremely common with a lot of the runners lately. It's just it runs up, offering, runs up, offering. It's easy to lose money, especially if you're holding overnight.
With the OTCs is you rarely see them gap down. I've been trading these for 6 months and I've got caught in some gap downs, but as soon as it's gapping down, like you just can't hesitate. As soon as the market's open, I have my order way below the best bid, and you just fill instantly, and you usually get a good fill, and then it starts panicking, and it would have been way more harder to fill. With the OTCs, it's a lot easier to get out, I feel like, than with these listed stocks. If there's an offering and there's $1 a share, you just can't do anything. You've lost $1 a share, and if you have 2, 3, 4, $500 shares, there's like 20, 25, 30% of your account.
That's especially true as a small trader. It doesn't sound like huge size, but to some people that's half their account or their whole account. So it's tough.
Yeah, so you've had an incredible turnaround in the last 6 months. You've been trading for a year and a half, I believe you said, and with mild success in the beginning, and then the last 6 months you've really just kind of turned up the heat. So aside from just switching over to OTCs, were there any philosophies that helped you become successful recently?
I think I finally understood risk reward. I feel like way too many traders are focused on this is a pattern where the win percent is X. So you kind of forget about risk reward and you're focusing way more on your conviction that this play is going to do X. You know what I mean? If you're focusing on risk reward the whole entire time, screw the odds of the play, screw like everything. Just focusing on that risk reward ratio is everything to me. When I was trading all these listed stocks and before, I would have the mindset of what's the odds that this stock's going to play out. You know what I mean? I'm trading the odds of the pattern and now I'm trading the risk reward. And I think that's been huge.
Awesome. So starting to wrap this up, what's next for you? Are you going to continue trading these OTCs that you have success with? You mentioned you were dipping your toe into some other strategies. Any other big plans for your trading going forward?
I'm just going to keep trading my OTCs over there at E-Trade. I just wired out $30,000 to reopen my center point account. I'm not just going to start trading a bunch of like random listed stocks. I think I'm going to stay really patient for OTC first red days, and that's probably the only strategy that I'll take a decent amount of size on because I'm fairly comfortable with that. But now I can start shorting those OTCs when they do get extended, and that could tack on a lot of money to my months if I'm able to get 1, 2, 3 of those a month. I am starting to start trying the overextended gap down again because that was a strategy that I already proved that I was decent at back at the start of 2018. And I'll just keep trying to learn from all these listed traders with the center point account, but I'm not going to risk a blow up ever again. If stocks start going against me, just cut immediately. With the OTCs, I'm just got my E-Trade account and I'll be trading the same strategies that I do. And I'll just be patient waiting for the next top market.
Yeah, it sounds like you're starting to finally get to the spot where you're comfortable adding in some different strategies to your arsenal, which is where a lot of people start to see some success from what I've seen.
Yeah, I'm definitely excited to see where the journey takes me through the rest of this year. What was pretty cool is me and my roommate took in a couple new traders, and they work in our office now too. So it kind of helps us, whereas we teach them too. It kind of makes us not do anything stupid. And when we say like when I'm confident, I actually can take more size because if we all agree, then it's higher odds than if just, I think, oh, this, or you try and just make a wild prediction and the three other people in my office can kind of just make you not do something stupid, you know? Having like accountability right around you all the time is really good.
Sounds like an absolutely incredible environment to be a part of.
Yeah, it's awesome.
Yeah, do you think, I mean, you mentioned it gives you some confidence, but did that it had to have sped up your trading learning curve just because you're around other successful people and you had your mentor and stuff, and that's awesome.
Yeah, definitely, because I mean, there's competition in the room, you know, who can get more size in the OTC with the least amount of risk, you know, and it keeps us always focused in on the stock and always trying to improve and see if we can just keep taking it to the next level, you know?
Yeah, absolutely, man.
So I don't know if you've got anything else you want to kind of say, any closing thoughts? It sounds like, again, you've had a really great journey so far. So if you've got anything else you'd like to say for people who are new to this, any advice to them, that'd be great.
I mean, really focusing on trading as much as you can, maybe even paper trading, and just tracking statistics on the patterns that you're trading, seeing what you're good at, and just really just putting in the screen time of watching the tape trade, because I think that's a huge thing, is getting a feel for how stocks trade is kind of what separates a lot of profitable, unprofitable traders, because people, if you just like are buying a stock on your phone or something and you're not like watching the level 2 and watching the trade develop, it's a lot harder to be a good trader, you know what I mean? You really just got to put in a lot of hours on the screen watching these stocks trade.
No, I think that's great advice for people who are just kind of starting to get into this. So, unless, Matt, do you have anything else to ask or say?
No, I mean, thanks for coming on, Jack. It's an honor for us to have you, and thank you for sharing your story with us and, you know, all the listeners.
Yeah, thank you guys for having me on.
Well, thank you again. We're excited to see where you go in your journey. Best of luck to you in the future. Hopefully we'll stay in contact.
All right, guys.
We hope you guys enjoyed this week's episode of Beyond the PDT with our guest, Jack. If you guys have any questions about this particular episode or the podcast in general, be sure to check out our website, www.beyondthepdt.com. There you can find an About Us page, our blog, and our connections to our social medias. That's all for this week, and we can't wait to see you guys again next Wednesday.